All right. Today's SPY was down 0.55%, and we are seeing a rejection from that resistance zone right around 449, and we are coming back towards this support level, which is going to be between 442 and 444. Now, keep in mind, tomorrow is CPI data, which means we are likely going to see a major catalyst for the next leg in this market, and right now, I still favor the fact that we're going higher towards the gap closes, which is the gap close at 449 and 455. Now, there is a bearish scenario building up, and it's only going to get validated if we break down below support, and that is going to be the rejection from the lower high right around 449. The break of support at 442 will confirm it, and then we will be likely heading down to 430. So the only reason I'm favoring the bullish scenario is because we do have the bullish trend, which is evident by all of the moving averages and price action still above critical support. But obviously that is subject to change, because if we lose critical support, we'll likely lose the bull trend, and then this will look like a lower high, lower low, and then we could break down towards that critical support at 430, which is on my weekly chart analysis as a possible scenario. So there is still a bearish probability that we could go to 430, but I'm personally not going to trade it until we get the confirmation of the price action, because I like when the price action does all the talking. That way I have no bias in my trading, and in order to do the bearish trades, we need to lose that critical support, which is right here at 442. So below 442, we're going to have to get more bearish, but while we're above it, I think there's still a very good chance we're going higher towards 455. Even though we do have some pretty strong resistance right here to break through at 449. On the NASDAQ 100 triple Qs, we were down 1.11% today, and the triple Qs also had a rejection from 377 down towards support down here right around 372. And just like SPY, there is going to be a bearish probability that we're going down towards 355 if we lose support at 370. So 370 is critical support in the triple Qs, otherwise we are likely heading higher into the 380s. And again, I am favoring the bullish scenario because we still have the bull trend and we're still above the critical support at 370. So watch for upside resistance right around 378. And if we break 378, we should be well on our way towards 387 and possibly higher. On the Dow Jones, we were flat on the day, only going down 0.05%. And we did hold the breakout of the price action back above all the moving averages. So we are starting to build up that bull trend yet again, as long as we can continue to close above 346. Critical support in the Dow is going to be that weekly support down here right around 342, but on the daily chart, we need to hold this level at 345. Otherwise, we are likely going to the weekly support at 342. And then below that, we have a gap to fill just above 339. We're getting a lot more bullish if we can close above 350, and then we'll be on our way to 353 and 356, and we still have a gap to fill all the way up there at 360. On the Russell 2000 IWM ETF, we were down 0.1% today, and price action is still below all of the moving averages, so we still have the bear trend, but we're not getting bearish until we break below critical support at 183, because you never want to short near support, because that is where we are likely going to bounce. If we don't bounce from 183, that is a good shorting opportunity down towards the gap fill at 176. But please keep in mind, the Bollinger Bands currently do not allow for us to go down and fill that gap. So we will need to see some more price action and expansion of these Bollinger Bands to see where we're going next, with the critical support at 183 and the critical resistance at 188. On the ARKK ETF, we were down 1.32% today, and we did not get the second day in a row of breaking that critical resistance at 44.5, but we are still above this critical support zone at 43. If we break 43, we're likely coming back down towards 40, and if we break 40, we're likely going towards the gap fill at 36. And if at any point we continue to break resistance at 44.5, we also have a gap to fill just below 49. So I would consider critical resistance 44.5 and then the critical support down here right around 43. On the VIX, we were up 3.11%, and the VIX is still trading below 15 and still in a bear trend, and it's very likely that the VIX is trying to head down lower, which is going to be more indicative of the bull trend. But if at any point the VIX does spike and close out above 15, that is going to increase the chance of panic selling, which obviously would favor more of the bearish scenario. On Bitcoin, we're currently up nearly 4%, and we are getting high volume buying from that support zone, which is no surprise because that is a very strong support level, not easily broken. And that is exactly what I just said last night, that it's a very strong support, which means if we break it, we would likely see straight line flush to 22,000. So I think there's a good chance from here we're going to bounce up towards 28,000. And if we break 28,000, then we've likely seen the bottom and we're going back into the bull trend. And if we get a lower high rejection from this negatively sloping 50 EMA, that's going to increase the probability we break down and go to the next leg lower. On Tesla stock, we were down 2.23% today, and intraday we were trying to break that resistance, but we were just way too far outside the upper Bollinger Band, so we did get profit taking, and we're now trading down here right around the risk level, which is the breakout at 266. So if at any point we break the support at 266, you will want to look for that gap fill at 256. Now, even if we come down to fill that gap and hold that level as support, that's easily still a higher low before we go hit the next higher price target, which is up there right around 290. So in the event we go lower and hold support, that's still a buying opportunity with a low risk entry because you're getting the retest of the breakout before we go to higher prices. But do not rule out the possibility this is just a pullback because we were overextended and we're still going higher. On Apple stock, we were down 1.71% today, and Apple continues to reject below all of the moving averages, so we obviously still do have a lot of bearish trending, but the critical support is 174. If we break 174, I think there's a very good chance we're going to fill the gap at 167, but if we bounce from 174, I think there's a good chance we go fill the gap above 181. So manage your risk right there at 174 and you'll know which direction to trade, whether or not price action is above or below that level. So jumping back over to the S&P 500, tomorrow is going to be a very big day as a catalyst for price action to start moving. And we have very well-defined risk right here at critical support. And if we lose critical support, we are going to have to start favoring the bearish scenarios because we're going to lose the bullish trending. The trend is your friend until the end, and right now we still have a bull trend, so there's no reason to assume support is going to fail. That is why I always say let the price action do all the talking. That way we're listening to the chart and not some bias. It's not bias if price action loses support, then we instantly know it's bearish and then we can trade bearishly. But right now we still have a bullish chart, so we still need to give all of the benefit to the buyers because they are currently in control. So don't forget, you can still take advantage of the BANC Labor Day sale, and if you're an existing BANC member, do be sure to capitalize on that BANC annual savings because if you're a committed BANC member, this is the best savings you're going to see. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.